Time for a June Vanguard portfolio update, and it's not looking great. The stock market is continuing to tank, and this is reflected in my portfolio as it's currently down, not just for the year, but all time. In this video, I'm going to be going through both my ISA and my SIPP, as I now have a SIPP through Vanguard. I'm then going to get onto my actual investments, how they've been affected with the recent market crash, and finally, and most importantly, what I'm going to be doing about it going forward. So stay till the end to hear that. To get straight into it then, my total portfolio value is looking like a nice, healthy £24,800. This has been built up mainly through regular investing every single month over the last nearly 4 years. As you can see, my total value is 24.8k, but importantly now, my total cost is actually higher at 25.7k, which means I'm nearly down £1,000 in total across my investing career with Vanguard, which essentially means I've lost money on paper with investing.
Oh my God! Okay, it's happening. Everybody stay calm.
To then break it down between the different two types of accounts I have with Vanguard, and obviously most of my money is with Vanguard. I do have other accounts, but my Stocks Shares ISA particularly is my biggest account, and I have £23,621 with my ISA, and that is down, as you can see, £841. With my SIPP, which I recently opened, the total value is only £1,200, but that is also down £84.52. So in total, I'm down nearly £1,000 with both my SIPP and my ISA. So the main reason why this has happened, to be honest with you, is first of all, the market has tanked mainly because of inflation fears. Inflation's been rising. To then counteract this, interest rates have been rising. This has all had a negative effect on the economy and the stock market. There's also other things going on with supply chain shortages, the Ukraine and Russia war, and so on. But overall, to sum all of it up, there's uncertainty in the market as investors don't know what's happening next. This then affects investor sentiment, drags the stock market down, and this clearly and unfortunately has been reflected in my portfolio. And the second reason, and probably more importantly, is that most of my contributions have come when the market was at its top between sort of August 2021 and then the start of 2022, before we've had this big crash that's been tanking the market. So when I first started off this account in August 2018, I originally just was contributing £100 a month, and that was all I was doing. However, as of October 2021, I've been doing £650 per month, and if you watch my videos, you know I also done a lump sum investment of over £4,000 at the end of the tax year in March 2021. So a big bulk of my contributions in my portfolio have come when the market was at its highest. That then means my unit cost, or my average cost, has been weighted towards those higher prices, and now because the market has crashed, my portfolio has been impacted, and I'm now in the red. This, I think, is the first time I've been in the red since probably 2019. So to give a bit of history about my portfolio, when I started investing in August 2018 into my Stocks and Shares ISA, there was a bit of a crash at the end of that year, and I spent pretty much the first year of investing in the red. So I'm very accustomed to this. I know this is just part of investing, but I think since mid to late 2019, I've not been down. In fact, if you look at my previous portfolio updates, I'm normally up £1,000, £2,000, maybe even £3,000 at different points in time. However, now all those gains have been completely eradicated, and I'm also down nearly £1,000 overall. So on the screen now you can see all of my investments over the last couple of months, just for proof to show you that I'm not just talking about this, I'm actually walking this and doing what I'm saying. I'm putting £650 into my ISA every single month, and my new addition is £400 into my pension every single month. There's also some other pension transactions there. I've got a full video on why I opened a SIPP, and I go through all of that. So I'll link it up on the screen if you want to learn more about that. So then sort of just consolidate how depressing this has been with my portfolio being down. If you look at my year-to-date performance from the 1st of Jan to today, which is the 20th of June, I'm down 14.72% in my entire portfolio. So even though I've been contributing £650 per month, I'm still down overall on my portfolio, which obviously is unfortunate. If you then go back to my lifetime contributions from when I started this in August, I'm also down 10.21%. So I'm down both year to date and also lifetime, which obviously isn't pretty reading, but as we're going to come on to now, it's just part of investing. You might be able to tell based on how I'm speaking now, but I'm not particularly concerned. I'm going to tell you why, and then I'm going to tell you what I'm going to be doing going forward.
Drum roll, please.
So the main reason why I'm not concerned is just this is part of investing. Of course, it's not nice seeing your portfolio down. Of course, I would rather be up thousands and thousands of pounds like it was previously, but this is part of investing. If you look at any stock market, there's cycles, there's up and downs, booms and busts, and really, because there was such good returns during COVID with all the money printing and quantitative easing, it's only natural that the stock market comes back down. So it's completely part of the normal cycle. And I think the risk is a lot of people get invested when there is the top of the market. So then when they see themselves losing money, they start panicking and they start selling. And this is the complete opposite of what you want to do. Now, when the market is actually down, is actually the best time to invest. I'm going to be continuing to invest regularly, but really now, if I can actually invest extra money per month, maybe through getting a bit of extra income or having a bit of my budget left over at the end of the month, I'm able to actually invest at a discount, which of course is ideal for a long-term investor. And that really is why you need to almost define your time horizon before you start investing. If you're investing for the short term, then it's impossible to know what's going to happen and what returns you're going to get. If you're investing for the long term, then actually lower prices are better. And I tweeted about this a while ago, but I actually said I would rather, because I'm still young, the market crash 50 odd %, I can then invest at really, really low prices, and then over the long term will make even more gains. Of course, once again, it's not so nice seeing losing money on paper, but you almost got to try and get into the mindset of, if the market goes up, it's good because you're making money. If the market goes down, it's also good because you're investing at a discount at cheaper prices and you make more gains over the long term. And to be honest with you, I actually hadn't checked my portfolio since my last update, and I was, I think, in the positive then. So it was a bit of a shock when I first looked at it, but I sort of expected with everything that's going on with the economy, inflation, interest rates, wars, supply chain issues, and so on. Finally, I want to touch on what I'm going to be doing going forward. And I mean, if you've been watching my videos for a while, you probably know what I'm going to say, but I'm literally not going to be changing anything. I'm going to continue to invest £650 into my Stocks and Shares ISA, and now my new addition, £400 per month into my SIPP or my private pension. I'm going to be continuing to do that every single month and hopefully take advantage of these lower prices for as long as they stay low. As I mentioned and alluded to earlier on, if I do get any extra money, I'm now even more inclined to invest it, well, because prices are lower. I can now buy at pretty much a 20 odd % discount than I was buying 6 months ago. Of course, it's been unlucky that I increased my contributions and also invested a lump sum when the market was higher, but as I mentioned, I'm investing for the long term, and I imagine a lot of people watching this have a sort of similar mindset to me. You're investing for the long term, so almost ignore the percentage change, how much money you're making or losing. Just focus on getting money in the market and then compounding time, and the global stock market will do its thing over the long term and give us our returns. And that's all that matters. You know, we're not going to need this money, hopefully, for decades, so we can ride through these crashes, invest at these lows, and then in the end up with a bigger pot that we can one day live off of. But yeah, that is my Vanguard ISA and pension portfolio update for June 2022. How is your portfolio doing? Let me know in the comments below. I imagine a lot of people are feeling it, which is only natural with everything that's going on, but let me know how yours is doing. Thank you for watching, and I'll see you in the next video.